Thank you for joining us for our new series of podcasts, Talk with Traders. In today's episode, I'll be joined by BrendonD, who has been day trading for about 3 years, and most of that time with Bearable Traders. Brendon currently lives in California and balances having a full-time career in the financial services industry with the pressures of trying to be a successful day trader. Today we'll talk with Brendon about what originally got him interested in day trading, how his overall experience has been to date, and what he hopes to achieve in the future. I hope you'll enjoy this podcast. Brendon, welcome.
Thanks, Peter.
Hey, it's good to talk with you.
Thanks. Yeah, it's great to be on.
So, we had a chance to talk just a couple of minutes ago. We're talking a little bit about your background, but I'd be interested to sort of hear the background. Like, what originally got you interested in day trading?
Yeah, so I guess what got most people interested was the money factor. I mean, I just saw these ads online and be like, "Oh, make $10,000 a day, $5,000 a day." And
Yeah.
I was like, "How is this possible?" I mean, and I guess was looking for that easy money, thinking that this would just be pump and dump and follow a newsletter and make money, but it turned out nothing like that. And after I realized that, I realized what it took to be a trader was nothing what we hear. You don't want to trade low float. You want to trade what everyone else is trading. You want to trade mid to high float stocks, stocks in play. Not pump and dump, not volatile junk that I've seen out there, and then it became less of the money and more that I was able to produce something on my own. So, I mean, working in client services was more that I was servicing individuals, and I always wanted to actually produce something. And being able to trade was that it brought my mind into it, that I can look at, let's just say, a stock chart and be able to make a decision that will be profitable. And it was just not so much for money, but be able to be good at something and be in control.
I can understand that. We all want to have stuff that we're good at, right? And that makes us feel sort of empowered. Now, you told me earlier that you actually moved in part, I guess, to help facilitate trading.
Right. So I realized that it's probably too much pressure to save up a bunch of money, quit your job, and then think that you could be profitable making trading within 6 months to a year. And that really wasn't the story. Was that I was trying that. I decided to save up some money. I left my current job. My girlfriend at the time was working, and it was just too much pressure. It was just that, I was living on the East Coast, so I was trading normal hours, and I couldn't work full time in trade. So it was just too much on the table, paying rent, house mortgage, and
Right.
Car payments. It was just impossible to stomach all that. And so I decided that my wife had the opportunity to move to California and work in an office for her current company, just have kind of transition of location. And that was perfect for the time zone, because I know Andrew just lives just up above in Canada,
just
in
north,
Vancouver. So I thought, okay, so he mentioned in his book that he used to get up before work, trade, and have the luxury to go to a full-time job afterwards. And I said, if that's the way Andrew did it, let me try to mirror that. And that's what I did. We moved out here.
Wow.
I got full-time work, and it's a lot of work. Let me tell you, you have to get up, 6 o'clock or before, trade for a couple hours, head off to work, and just be able to rinse and repeat and do that every day.
Yeah. Well, I know Andrew struggles with the early mornings sometimes. So
yeah, having that paycheck come in just takes the money factor out of trading, that you could just focus on doing it correctly, following the rules, and not worrying about, are you up $100 today? You're down $500. That's not in your mind anymore, and that's really key to begin to be a day trader. So
Right. Well, that's key. We never recommend that somebody quit their job because, as you say, that puts so much pressure on you to perform in day trading, as opposed to being able to focus on just trading well rather than the P&L.
Yeah.
Now, you mentioned that, so you've been day trading for 3 years, is that right?
Almost 3. It's coming up on 3 years, almost 3 years with Variable Traders.
Okay. And I was going to ask, so it sounds like Bearable Traders has been part of that journey along the way. Like have you learned sort of most of what you apply in day trading from Bearable, or did you go to other chat rooms, other online resources? Where'd you get your education?
Yeah, so I bought a couple. Actually, I have a couple Beyond Candlestick books here. Sorry about this. A couple of these books here. Like I said, the old Japanese candlestick book from the 90s and 80s that everyone's read.
That's a good one.
Couple more of them over here, but basically, I was just trying to get the technical.
See, we all have those.
I have that book too.
Yeah, there you go. See, this is an old classic, and you can tell I've got it all dog-eared. I mean, we all have these books that we use. So.
Oh yeah. So I was basically trying to. I'm a big fan of reading rather than kind of Googling terms on Investopedia. So I just wanted the books in front of me that I could sit down and read, and needed some material. So I was just searching through Amazon to see what's popular. Then Andrew's book came up. I'm not sure, what I exactly searched for, but that was How to Day Trade for a Living. And I saw that he was part of a small trading community. There was a chat room, all the tools that I really wanted to understand, what do you day trade? What do you use? I didn't know where to start with that. I mean, I heard terms, candlesticks. I heard, 5-minute chart, 1-minute chart, the VWAP, and really didn't know what material to get. So I just, before I looked at Andrew's room or joined the chat or Andrew's website and joined the chat room, I purchased his book off Amazon, and it was really I purchased a few other books from other chat rooms, and Andrew's was just more in detail, more in depth. It was longer. It had more examples, and I liked that it didn't trade low floats. So that was just a big factor that just because I first jumped into trading penny stocks because that was with small accounts. You can. You can make a $500 account. You could, triple that account if you wanted to, and that was appealing because most traders that start have small accounts, and to be able to make a few $100s, you need to trade something volatile like penny stocks. And of course, I lost those accounts and never went back to trading penny stocks again.
That's the attraction, right? That you think, I can sort of double or triple that account really quick, but just as quickly you can lose all of that account, right?
Yep.
Wow. So you progressed from the penny stocks to trading stocks that you're more comfortable with, and so now you trade primarily what, sort of mid to high float?
Mid to high float, anything above 20 million, and float up to a few hundred million. Just the regular stuff, just nothing too volatile anymore. And that I know that the candles will have huge wicks, we're going to get stopped out. Something that just kind of behaves better than penny stocks. They're not pumped, not in fake news, or usually a real catalyst that we like to look for, whether it's earnings or a lawsuit or something that material news that's real and not just a pump and dump. So that's really just all those tools that are in Andrew's book that I just follow on a daily basis. So the scanners, of course, Trade Ideas was a big. Where do you start? What do you trade? You can use stock twits and all those resources too, but Trade Ideas is really just have it there in front of you. The Gappers Watch Us is really gives you a great starting point on what to do. So every day you don't have to have anxiety of what do I trade? Am I trading Apple today but not tomorrow? So just kind of a setup of where to begin.
Yeah.
And I didn't know that when I was trading the penny stocks, and it was too late for those accounts. That's okay.
I had a conversation with somebody over YouTube today as we were doing our daily show, as we always do, and they were saying, I'm not sure. It looks like this community, you trade stocks I can't afford. I'm just getting started, and I've got a small account. I need to focus on the penny stocks. And I was, I said, hey, 1 second, right? Some alarm bells are going off with that statement. I'm a little worried because that's the perception, right? That if I start with penny stocks, I can build my account, and then I can worry about trading in a bigger account. And I would always argue that if you trade with proper risk management, you can trade almost anything. It just means you may trade sizes that people don't tend to talk about online, right? Because they always talk about, especially nowadays, have you noticed how many people are out there like, I made $40,000 today? And I'm thinking, wow, like really? Okay. They're like, if you did one,
$40,000 loss. I mean,
yeah, well, that's it, right? I mean, it comes. I mean, hey, if you've got like a big account, you could do that. But you're right, a $40,000 win may be a $20,000 loss tomorrow. But you know, people often don't talk about the fact, like I said, you could trade 10 shares of Microsoft and still make some good money on it because it'll move a couple of bucks, and you know, you start to build that way. If you're trading $10 risk, then a $30 win is a great trade, right? You just made 3 to 1.
yeah.
So, you know, I think you have to balance that. Now, is that sort of how you built your account? Did you start with small size and build up, or?
Yeah, I did. I started a small account with CMAG, and that was great. It just was the fees. I think it was about a minimum of $3 per trade, so $3 in, $3 out. And when I had a small account, say, you know, $10,000, it bothered me that, you know, I wasn't really interested in making that much money, but I just didn't like the fees hitting my account. It just made me nervous on partialing and, you know, adding in or partialing out, and I didn't really want to do it. But the use of that broker was that it showed me how to use DOS. It showed me, you know, it gave me an understanding of margin, and just really, it was a good beginning. But I think that the proper way was to have a larger account. So I saved up to have over $25,000 to use IB, have low commissions,
right, and
to have a large enough account where, you know, risking $25 is not going to budge that account around too much. Whereas, you know, yeah.
Yeah, and I always recommend you don't trade with fees in mind. However, when the fees are high, it does make it tough, because if you're trading small size with high fees, it has an impact on the overall trading.
Yeah.
Now, those fees have changed a lot in the last couple of years, and I expect them to further come down in the coming years. But I can understand, like, that would have had a material impact on your trades in the beginning. I want to go back. I'm really curious because you mentioned that so you sort of moved to California so you can do the jobs full time while you're trading, which takes that pressure off. I think that's brilliant, right? That's exactly what people should do where you can. Not necessarily move to California, but don't quit the job, right? Keep the job so you've got the salary, and then you can trade and perfect the skills without all of that pressure. But you must trade, I guess, just a few hours at the open and then head off to work. Is that how you manage it, or?
Exactly. Yeah.
Okay.
Just get up at 6 in the morning. Trade the open up until about maybe 7:45. So about an hour and 15 minutes or so, or an hour and 15 minutes in the morning. I like to be done before that. I don't like to trade right before I run out the door, but the first hour gives enough movement during the day where, you know, after 5 minutes or so, after the open, the stocks kind of find the direction and they become more tradable. They don't just wick around too much. So that first hour gives enough moves that I'm able to take, you know, 5 or 6 or 7 trades before I head up to work. And that's really it. I mean, anything beyond that, a couple hours in, is going to wear you down. It's going to exhaust you. And you've seen all the moderators and all the traders step away for a little bit after the open. It's just too much to keep, you know, that intense focus, because you're using 100% of your focus on those charts, and to stare at them for hours on end is just going to wear you out. I tried to do that when I was working at home now because of COVID, that, you know, take advantage of, can I trade all day? And it was just wearing me out. I couldn't participate in the chat room and scalp these stocks throughout the day when I'm working on the other monitors on the right side of my desk. So it was I found that it's just, that's what I do, just trade before work, forget about it, and move on. And
that must be why I'm so tired by the end of the day, because I'm in that room from 7:30 in the morning until we shut her down at 4:30. So
it might be because I'm doing 2 things at once.
Yeah, well, you also have that full-time job to worry about, right? And so that's that multitasking. We're not naturally good at multitasking, right? So doing that is tough, and especially, as you say, like, trading is intensive, and I think people don't always appreciate that to really, at least I find, to really understand a trade and be confident that it's the right trade with the right setup, following your strategy and rules, whatever they may be, you do have to sort of process a lot of information and really pay attention. And you can't sort of be answering emails over here and then come over and say, oh yeah, that's my trade setup, take it, and then move off again. Like, at least I find it doesn't work that way for me.
Yeah, that doesn't work. It's all exhaustive. And
Yeah.
you're looking at multiple indicators. You're looking at the level 2, the time in sales, the price action of the candlesticks. You're looking
Sure.
at the
What's-
moving averages, the volume.
Yeah, what's the overall market doing? Yeah, I mean, you got to be aware
Yeah,
of
you're
all
looking
that.
at the SPY of a whole monitor dedicated just to the SPY, but you're looking for that break. Is it breaking up? Is it breaking down? And that precise second needs your 100% focus, because if you're a second late, you can miss the move,
Right.
and then that's it. It's over with. So you need every second counts in this type of work.
Sure. So give me an idea then, if you're trading a couple hours in the morning, rough idea what your setup looks like. What have you got, 1 or 4 monitors?
Yeah. I really should do a setup. Show me my trade stand.
Yeah, that'd be
series.
great.
I forgot about. I'm not sure what it was called, but I was watching a few.
Yeah.
So I have 8 monitors. I had this set up since
8?
December of.
Wow.
Yeah.
Wow.
Since December of 2017. I knew Andrew had 6 at the time, so I just. I don't know, wanted to outdo him.
Yeah, you had to one up them, eh? Or 2 up them.
I don't know. Yeah. So 8 monitors just in a whole panel, just kind of surrounding you.
Wow.
I have. I wish I could show you guys, but I have 1, 2, 3, 4, 5 monitors watching 1 stock each. So 5 stocks, 1 on each monitor, and then the other 3 monitors, 1 for DOS. That's just your your account and all the other information in DOS, and then 1 for the chat room, and then 1 monitor just watching a SPY all together, just so I could just always see what's going on with the SPY. Big monitor for that. So
wow.
It's not. I find it useful. I mean, I have the 1 minute, the 5 minute, the 15 minute, and then the daily on each monitor. So I don't use a 2 minute. I just don't have enough real estate for all that, but.
Right.
I just stuck with Andrew's basic setup, the 1 to 5, and I threw the 15 in there, and then just watching the daily, all at once. And and then I just I use Kyle's hot. If you want to jump into that, how I take the trade, I use Kyle's hotkeys, and I do a depending on the day. I start small in the morning because I'm usually still waking up. And not sure how I'm reacting, how my reactions that day. So start with like $25, $50 risk.
Right.
How are my trades going? Maybe 1 or 2 trades. Are they not going too well? Are they going well? Am I functioning properly? And then maybe I'll increase that to $50 or $100 if I'm trading well and stocks are finding their direction and I really see an opportunity. I'll go in a little heavier, but I don't risk more than that. That's enough for me. Making a couple $100 a day or losing a couple $100 a day is really what I stop at. And I use Kyle's hotkeys with the stop or the hard stops. I believe in those. The only exception is if the stock that I'm watching is developing on the 5 minute or the 15-minute chart. Is it starting to flag? Is starting to pull back to the 9 EMA or the 20 EMA on the 5 or 10 minute. Then I will maybe add in more if it's starting to take longer to make an ascending triangle up or a descending triangle down. That's the only time. If it starts to break down beyond that, I'm out. I don't hold stocks all day. I don't swing stocks if they don't go in my direction, because that's just a recipe for disaster. So I let you get out. It's tough to get out at a loss for a couple $100. But you can go back in and be careful. You can make that back. It's possible to recover from that, but it's not possible to hold the stock and let it wash you out, because it could run against you all day and you'll never come back. It's not worth it.
Never turn a day trade into a swing trade or a long-term hold, right? It's a recipe for disaster.
Just let it go.
Now, that being said, if you're in a good trade and you've got to head off to work, do you set automatic stops or do you exit all positions before you leave?
I thought about that. I think actually Kyle's working on a few new scripts with DOS about that. I'm not sure. But usually I just shut down. I don't.
Okay.
Yeah, I have DOS on my phone just to kind of check my account if I was curious of what a stock was doing. But yeah, I don't want to. You don't. I mean,
you don't go and trade off your phone while you're on the way to work. No.
I find half the time the stock comes back and hits my break-even price. So I mean, some days you make it all-day runner, and other days you don't. So I just shut down.
Okay.
Yeah,
makes sense. So You mentioned about a couple $100 is good for you. Do you have a set target that you try and achieve on a daily basis, or are you just sort of happy with whatever you can?
Yeah, it's a range. I'd say anywhere from 150 to $500, anywhere between there.
That's a big range.
Yeah. I mean, if I really get a nice run on a stock and it gives me up to $500 profit, that's it. I'm done. But
sure.
If a couple stocks maybe I don't get as much of a run, it's maybe $50 or $100 in each of those. I'll keep trading.
Okay.
It's early in the morning. There are plenty of movers out there usually, and there's no reason to stop.
Right.
If you haven't reached your target, because opportunities will come out there. They're always there. You just have to wait for them. So, yeah, I mean,
So against that, what is your typical risk per trade? Do you have a fixed risk per trade that you'll take, like in terms of a loss?
Yeah, I mean, I set the risk. I start it in the day at $50 risk, or sometimes $25 risk. Kyle's Hockey will calculate the risk and the share size for you. So I'll just change that. But I always start the day with low risk because it's just too volatile near the open. I get stopped out too much, and it's not worth risking $100 to $200 at the open.
Yeah, I agree.
I've done it before, and it's not for me. I'll warm up using $50, and maybe I'll be good enough to do the trade the open. But it's usually starting small, and then I'll increase it to $100 or $150. But I don't go beyond that. That's enough for me.
Yeah. Yeah, one of these days we'll all be able to trade like Andrew at the level where you can just go in sort of full size in minute one, right, and make it work.
No,
I'm not there either. I'm still working towards that.
I don't need that. I don't need that stress.
Yeah.
Right now.
And do you have a max? So what's your sort of max risk per day? Like when do you call it a day and say it's not working?
A couple hundred, between $200 or $300.
Okay.
I cash it if I'm hitting that. And it's getting close to where I got to go to work.
Yeah,
that's it. I'll just shut down.
Okay.
And I'm happy with that because the other day I lost $350, and then the next day I made, I think it was $550. And I understand that I can lose a few $100, but I could easily make it back the next day.
Right.
We're not, but I mean, after a few years in, my consistency is enough that overall I'm making more than those. The green days are better than the red. The green days are better than the red days. So,
well, that's the key thing is to have that confidence. So, since you alluded to it, what's are you feeling that you're in a place where you're relatively consistent? You've got that confidence to take the trades that you want to or need to based on your strategy that you'll be able to make it back.
Yes, the strategy is using just basic flag setups, the flag up, flag down, 5-minute breakout to breakdowns. The 1-minute breakdowns and breakups those are hard. I'm not good at the 1 minutes, but after 5 minutes, usually stocks find direction, and I like taking those trades.
Okay.
And reversals are tough. I don't like taking reversals. I tend to lose on those more. But I do like the reverse ABCD or ABCD pattern. Seem to be the most consistent, and I've stuck with that. I haven't really gone beyond that. Of course, I do pay attention around VWAP and different daily levels, pre-market levels, lower day, high day, all that stuff. But I always wait for those wedges, ascending, descending triangles where it squeezes, the flags where they kind of squeeze up and squeeze down, and just stick to that. I don't want to overcomplicate it.
Right. So you've got a couple of strategies. You said sounds like 5 minutes. You wait, so roughly 5-minute breakouts, flags. So this is the pennant type patterns. Is that it? And ABCDs? Is that what you do?
Yeah, that's it.
Okay. Yeah. No, that makes sense. Look, sometimes people get overcomplicated. There's lots of ways to trade, but you don't have to do them all. Stick to a couple of strategies that work for you, and
sometimes I will try to scalp on the 1 minute. Let's just say a stock rips up or rips down,
right?
Pulls away from the 9 minute on the 1 minute, or even pulls away in the 5 minute. I'll try to catch a quick scalp because usually something that goes parabolic will snap back down. But that's where we have to watch it level 2 and really see where is that time to to go in short to have that pullback to the 9 EMA and then cover. but you get those are like 5-second trades. And sometimes I jump in for those, but those are tricky,
right?
But they're fun.
And do you use level 2 a lot?
Yeah. Oh yeah.
Okay.
I like the Thor's. I think one of Thor's classes was the level 2 analysis, where you look for those big bids, big asks.
Yeah.
I haven't played with the what was it, the volume by price a whole lot. I see the value in that. I just I can't read it yet. I have trouble reading.
Yeah. I'm still using it. I love the theory. The volume by price study it does take a little getting used to, especially when you're used to vertical bars, and these ones are going horizontal, right? So it's I think Thor is our resident expert on level 2 and reading level 2. I mean, I use it all the time to understand what's happening, and I think it's very valuable. So yeah, it's good to hear that you use that as well.
Yeah. I say it's more of a basic reading, kind of. I think I stick with Andrews, where you see the big ask, you see the big bid, and then you kind of see is the price move towards that direction, and then I'll look at the time of sales. Is that bid being hit, or is the bid being sold to? Is the ask being bought? Did I say that right? I think I said that right. But you look at the time in sales, and you see what color is it being below the bid, above the bid, where are the orders actually being filled, and that's where the time of sales comes in. What you want to see is the bidder ask, who's in control there. So it's
those are always the challenges in getting those terminologies right. Yes, so something asks that are loading above the active ask are people that are looking to sell at a higher price. Ones that are at the bid or below the bid, or they're looking to buy at a lower price, right? Everybody's trying to get a better deal.
The price will come to them, essentially.
Exactly. That's exactly what they're doing. So you're trying to figure out where are people lining up to say, bring the price to me, and the more volume is where it tends to draw it. But, it's an imprecise science. It's an art at best. So, it is tough to manage. So, I'm curious then, you talked about red days, and if you're sort of red heading to work, you'll sort of cut it off, and you're happy if you sort of hit the goal anywhere between $150 and $500. Many of us have dealt with the challenges of having the Hulk days, and I'm curious, have you had any of those, and how do you manage them?
Yeah, so, actually a while ago, maybe few weeks ago, a month ago, I had a Hulk day where I tried to swing a stock into the after hours.
Oh, okay.
So I was saying, okay, it closed the day. Maybe I could trade it or move in the after hours, and it stopped as soon as 4 o'clock. The stock did not trade much anymore, and then it was just tick every 5 seconds the stock would move. It was. I think it was Stitch Fix, but it was very not tradable. And I thought maybe after hours I can get some movement in there and kind of make it back.
Right.
But not have. I mean, sometimes you may get an active after hours if there's earnings after hours. The stock will be tradable, but to take a day trade and think you can kind of trade in after hours or even overnight is not good. I don't do that anymore. It's not worth it. I'll just take the few $100 loss a day and wake up again and just get back to work. And that's what it takes. It's just, kind of the quote Rocky, you get knocked down, you get back up, and you just keep doing it again, but don't blow up your account in the meantime. And then over the years, you'll get better at taking punches. You still get knocked down, but you'll get up quicker, be able to swing back harder. And that's what it took. I mean, it took trading penny stocks, losing accounts there, then graduating to mid to higher float stocks, stocks that behave a little better, that are traded by a lot more professionals and pump and dumps, joining more professional chat rooms like Andrews, and just the time in that chair where you know how to react into environment.
Right.
I think you can adapt to it.
Well, what's the Rocky quote that you were alluding to? It's not how many times you get knocked down, but how many times you can get back up and keep fighting.
Right. So. Yeah.
There you go. That's right. Yeah, I mean, going Hulk or sort of, basically blowing past your stop in any given trade is something I think we've all done, and it's a tough one to manage. So it was interesting.
Yeah.
Stitch.
sometimes, like I said earlier, that a stock maybe has that ABCD pattern, and you're expecting a pop at a certain point, but it hasn't really pulled back. So look at the larger time frame. It may need to pull back more on the 5-minute before it pops again. So you can. That's why don't go in too heavy initially. Like
Right.
I'll go in maybe a $50 risk, and then I'll add a little more if it makes sense in the 5-minute. Because if I was pushing the 1 minute, wasn't ready, then I'll look at the 5-minute. But beyond that, if it's not working, I'll just stop out.
Right.
And I'll take a few $100, and that happens sometimes. But I know that 5 minutes later, there could be a setup that I can go in a little heavier because it matured. And like today on NBAX, it took a little time to get up there. I think Andrew and I were trading, or a few other traders, and it ripped right up. And some stocks just take a little longer. But if they break down on a different time frame, you have to get out. You can't just sit in there. So I don't go beyond the 1 to 5 and the 15-minute. If things don't look good there, you're out of the trade. And partial in as well. I mean, average up or average down, depending on where you're going.
So you have a strategy where you will get in, sort of you'll build a position over time?
Yeah, I have. If the stock is looking better on the larger time frame, I'll partial. Kind of like Thor. I think Thor does something like that as well, where you partials in, partials out as well. Well, partial in is harder than partially out because you're in the money when you partial out. So partially in is dangerous, but if you just look at the time frame, see if it makes sense on the 5-minute. Don't look at that and try to force it to make sense because you don't want to take a loss, but actually look at it and make an opinion. But yeah, I do that. It's proven successful than just going all heavy in one price. Then you don't have to push the stock as much when you average down. When you want to go long, you don't need to get that huge pop because you average down. So it's a little more forgiving to get out of a trade that you maybe won't move as much as you originally expected it to.
Yeah, well, as long as you're doing it properly, right? Like if you have a strategy to get in gradually, I think that's good. If you're adding to a trade or averaging down just because it's not working and now you're trying to desperately make it up.
It has to make sense. A trade has to make sense. That's why don't go in too heavy in the start and see where the trade matures.
Right.
And if it's going against you and it doesn't make sense, you don't have a huge position because you only went in light at first. And I do that. So I like that.
Yeah, no, it makes a lot of sense. Good to hear you do that. And you're right. Thor uses that occasionally. He also loves to do his free rolls, as he calls them, which is after he's partialed out a bit and it might pull back, it might give him another opportunity where he can sort of add back into the trade for the next sort of the next move, right? Whether it's up or down.
That's the next level.
Yeah, and that's actually a hard skill. I mean, even Andrew says he's not good at that. I know I struggle with that. I mean, sometimes it works for me, and when it does work, it feels awesome. When it doesn't work, you just get stopped out early, and you just feel like you wasted the part of the trade. But that's the way it goes. So you're working full time right now. You're making a couple $100 a day. Let's say it's going okay. Where do you want to take it? Like what's day trading for you?
Yeah, day trading. It's still early, at least for me. Everyone has a different maturity level with day trading, and for me. I really want probably a few more years in the seat in a much larger account that I feel comfortable if I were to leave a full-time job and rely on this as income.
Right.
It's just not worth it. I mean, I have the luxury of being on the West Coast, day trading and having multiple incomes. It's not. I don't need that. I don't need to convert to full-time yet. I may down the line, but I don't have a kid yet. I don't have a house, so it's a little more to manage right now. But down the line, if I'd have a family, and day trading allows you to do all these different things that you may not have time for with a full-time job. So right now, I could kind of go full in with working, building my account, having paychecks, and day trading, and then later in life, if I get good at this, I can convert. So I'm considering that possibility too, but I don't feel that I'm there yet. I need more practice, more time.
Good. Hey, I think that's a very mature approach, and it's good. This is not a get-rich-quick scheme, unfortunately,
I never entered my mind at all of thinking about getting rich. It's just having some supplemental income that
Good.
it's nice to produce on the side. Just having a little extra. I'm not looking for that trading in the infinity pool or trading on my yacht or that would be nice. But that's not what motivates me.
Well, there's just so many YouTube videos out there that will do just that, right? I'm about to jump on my chopper that is color coded with my yacht, and you too can buy my thing, and you can make a zillion dollars in 6 minutes a day. It's just unfortunately it gives a false impression of the actual work it generally takes to day trade successfully, especially over a period of time. Anybody can get lucky. You can have some great trades, but you can also lose a lot of money if you really don't understand what you're doing. So I'm glad to hear, Brendon, that you're saying that you're going to take it slow and you're going to build towards it. And when you're comfortable, that's when you can worry about taking other steps. But the way you're doing it allows you to actually minimize the stress and the pressure on yourself on the day trading as well. So I think it's great. I appreciate and applaud you.
If I may say, what I'm struggling with is it's always a struggle to stop out. It just sucks. And that's a struggle daily.
Yep.
But over the years, over the months, my accuracy has improved. My ability to read the price action has increased. Even if you still get stopped out, that's inevitable. But you're better at picking those setups that you can take, and that's what you're trying to build. You're trying to build that skill where you can be more accurate, where you overcome your stops, and that's what I see the light at the end of the tunnel. Is just being able to be more accurate with my trades.
Sure.
And if I may say, what makes my day is when you're taking that great trade, you post in the chat room and Andrew calls it out, and that's just great. Like I'll post my trades where I get stopped out to be like, hey guys, like I got chopped up. It wasn't all great, but I went in heavier with a setup I liked a lot more, and I was able to turn that day around because I was patient and I really waited. And you have to know when to take it easy and when to go in a little stronger.
Right.
And just having that backup with the community in the chat room is great. Although I have to I can't do too much because I'm only in there for an hour in the morning, then I got to run off to work. But it's still that support to know, hey guys, check this out, or I took the same trade as you. That really makes it a lot just like you're part of something. You don't want to be lone wolf in it. It's not in this environment, not with this type of work. So
well, indeed. Well, good. I mean, I'm glad to hear the chat room provide you support, because we love managing it as the moderators. It's a lot of fun, and it gives us a support mechanism as well. I mean, all of us are there because we're traders first and foremost, and we too, we're seeking the that environment where you can find like-minded people to trade with, and that's how I ended up there. My story sounds sort of like yours from a background. I ran across Andrew's book. I was looking for where's a place I can go and get like sort of the truth about trading, because I mean I saw all these videos and these people telling me that you're going to make $1 million, and I'm like, look, I know it's not that easy. So it's and I had the advantage, I suppose, that I'd day traded a long time ago, early in my career when I'd had that opportunity. Much different world when I did it, but I came in saying, like, this is like I know it's not that easy, and I want someone who's not going to start just telling me how they're going to give me that magic bean that's going to make me a brilliant trader, because and I found it. I love our community. I think it's great. So and I'm glad you're part of it.
Thanks, Peter.
Yeah, well, good. Well, look, hey, thanks so much for taking the time here today with us and for talking with us. This podcast series is something where it's given us an opportunity to talk to yourself, Brendon, and for you to share your lessons and your stories with other traders out there, because everybody's going through similar journeys, right? Our situations are different, our goals may be different, but everybody's going through the same type of challenges in terms of trading.
Don't give up. Just stick at it. I mean, there's days where I say, I may want to tell my wife that this isn't for me, and I just want to cash it in, but I forget about that, and I working at it again, and I realized the next day what was better than the previous day. I was able to really pull it around and really see that you'll have a bad day, but you keep at it, and you just don't give up,
right?
And you'll make it.
Yeah.
So,
Well, good. I was going to ask if you had any advice for traders, but you already sort of went ahead and gave some of that. So thanks for that. I have to ask you a question because I've been dying to know. Right behind you, is that a chin-up bar? Is that a freestanding chin-up?
It's called a what is it called? A power tower.
Yeah.
It's got the dip station. It's got the chin-up and pull-up bar behind it. I can't quite see it. Maybe a little bit here, but yeah, it's.
There you go. That's what I thought. Yeah. Okay.
Yeah, well, the gyms are closed, so.
So do you like take a trade and you pump out like a dozen chin-ups? Is that what you?
Yeah, well.
How many chin-ups can you do?
Pull-ups or chin-ups?
Well,
like 20 or so.
20? 20 or so. He says that casually. I'd be ecstatic if I could do 20.
Yeah. No, yeah.
Awesome. That's awesome. All right, man. Thanks so much. We appreciate it. Thanks for being here with us, and have a great night. And we'll see you in the trade room.
Thanks. Yep. Go Bear Bill Traders.
Yeah. Thanks so much. Take care.
All right.
I want to thank BrendonD for sharing his experience with us and sharing the fact that he's got a plan that he's sticking with. He's taken a great approach to trading, and I think it'll serve him well in the long run. Brendon, look forward to seeing you in the room, and I hope you will join us again next time as we continue our series, Talk with Traders.